Joining us this morning, first on CNBC, Kellogg CEO Steve Cahillane. Steve, welcome back. Always good to have you.
Great to be with you, Carl. Thanks for having me.
You know, the market's been hungry for examples where a company can make up for increased input costs through better mix, better pricing. It sounds like that was your story.
Yeah, it was. We had a very strong quarter. You know, we drove volume, we drove price, we drove mix. Our brands held up very well despite all the supply chain challenges. And that's what we've been doing. We've been investing in our brands and making sure that they stay relevant with consumers. And it's allowed us to have a very good quarter driven by some of our biggest brands like Pringles, Cheez-It. Our international business performed exceptionally well, led by our EMEA region, a highlight on Africa. Our Europe business had 16 consecutive quarters of growth, really outstanding performance in the UK and Russia. So broad-based across the patch for us. But as you pointed out, price mix was clearly an important driver for us.
How sustainable, then, is that over the coming quarters?
Well, we think it's sustainable, Carl. I mean, we've been investing, as I said, in our brands. We've been innovating, and it's been driving very good performance in market and with our customers. There's obviously a lot of supply chain challenges, a lot of things to overcome. But when we look at where we've been over the course of the last several years, more and more our snacks business especially stands out, and it's really been driving sustainable, robust, dependable growth for us, and we see that continuing.
Steve, let's talk a little bit about the labor piece of the puzzle right now. The fact that your workers that are unionized, that are striking, have rejected the most recent offer you've put in front of them. How is that factoring into your forecast, and what is it going to take to see a deal actually manifest?
Yeah, so, we put the most reasonable assumptions in, and that's that we come to a deal soon. And what I'd say about that is, we're obviously still in negotiations with our people. We want our people back. I mean, they performed so heroically throughout the course of the last 18 months. The workers we're talking about are specific to our 4 U.S. cereal plants. And they have right now a contract that's expired that has industry-leading wages and benefits. And we put in front of them increases in compensation. So there's no takeaways, despite what some may have said. There are no takeaways. It is an excellent offer. We want our people to see that offer. We want our people back. And, we're working very, very hard to make that happen. And, we think that, cool heads and reasonableness hopefully will prevail. And we remain absolutely committed to making that happen. And again, it's increases on top of what's already industry-leading compensation and benefits.
Steve, it's David. If I recollect correctly, the last time we had you on, when we talked about inflation, you sort of indicated, yeah, you can call it transitory, but in my book, transitory is going to be for quite a while. I wonder, given what you're seeing right now, what your expectations are and whether they've changed at all when it comes to, broadly speaking, inflation.
Yeah, thanks, David. I hate to have been right on that one, but transitory is for some period of time. And so we don't see any kind of mitigation in commodity pressures, in cost pressures. And what you're seeing is all these friction pressures, logistics, all things supply chain still being disrupted. And so we're planning on it continuing for the foreseeable future. So we're not predicting an end to it. And we're looking towards productivity and what we call revenue growth management as a way to mitigate and protect our margins going forward. But clearly, 2022 is not going to change magically with the turn of the calendar. And so we're forecasting and preparing for ongoing challenges.
And how does price figure into that equation?
Well, price is important. Price is one of the levers for us. And, we don't talk prospectively about pricing, but when you look at what we've done over the course of this year, we've actually been ahead of it. So we've been able to cover all the commodity types of costs that we've seen. And we do that through price. We do that through mix. We do that through assortment, all sorts of things. But what we really try and keep at the center plate is our consumer and making sure that we're driving value for the consumer. So as we need to take price, we talk about the right to take price or the deserving of taking price, asking consumers to pay more because we're giving them more in terms of innovation, in terms of value.
Shepard Smith here. Thanks for watching CNBC on YouTube.